Kim, I'm going to start with you. Tell us how European markets are shaping up today.
Well, it's another higher day around the market, seeing a fair bit of bargain buying. Investors here were cheered by some positive macro data out of the US yesterday, and they are holding on to some of that optimism. But again, Spain is troubling investors. Worry about Madrid's finances is capping any gains we are seeing, and volumes low. Now, Spain's main benchmark index is underperforming the rest of the market, but we are seeing it that bit higher after a better than expected bill sale of 12 and 18-month paper. Now, Spanish bond yields also pulled back after that auction. The real focus for the market, though, will be the longer-term debt auction in Spain on Thursday. Looking at stocks, banks, which are ever sensitive to sovereign debt worries, are leading gainers. The Stoxx 600 banking index up around that 2.5% mark.
Right now, Kim, we also have a lot of data coming out today. German business sentiment is up, so is inflation in the UK. Run us through all the numbers that you have.
Well, if we look at that German analyst and investor sentiment information first, a surprise for most, it rose in April to its highest level since June 2010. The hope there is that Europe's biggest economy is recovering from a weak spell. We are seeing the poll of economic sentiment up at 23.4 from 22.3 in March. Now, the euro gained traction off this, and frankly, it's giving overall sentiment something of a boost this session. Closer to home, here in the UK, we've got inflation up last month as expected, driven by higher food and clothing prices. Now, this is adding weight to the view that the Bank of England won't give the economy another cash injection next month. Now, it ticked just a bit higher, but after months of decline, the hope was that falling price pressures would ease the squeeze on Britons. So some economists say this renewed rise in inflation could threaten recovery here in Britain.